Be Wealthy and Smart, episode 1013.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about, is the stock market bottom in? Because all around the media, all over the news, boy, were they negative yesterday. Oh my goodness. I could not believe every question they were asking was slanted negative. If anyone had any positivity, they were trying to turn it around desperately. It was really something to watch and to listen to. Sometimes I see that happen, and it happens when the shorts are in trouble. But here's what we saw happen yesterday. We saw heavily shorted stocks like AMC and GME up 15% and 30% yesterday. That tells me there was massive short covering. The shorts are betting AMC and GME will go down, and some positions were covering, and that's how the stocks moved 15 and 30%. Those are huge moves for stocks, and that's what tells me it's short covering. When companies are betting that the stock is going to go down and they're caught the wrong direction and it starts to move against them, in other words, they're losing money at an increasing rate, well, they either are voluntarily buying back the stock and closing out their position, or they're being forced to because they're getting margin called by their prime broker. Either way, they're forced to buy the stock and close out their position. And those who haven't closed out their positions yet are losing more and more money as the stocks continue to increase. And it's long been my contention that the crash that we're going to have is actually going to be on the upside, that many of these short positions are going to get caught the wrong direction, and they're going to have to continue to pay higher and higher and higher for the stocks that they have shorted, which is causing them unlimited loss potential. Because stocks can theoretically just continue to go up, and if you have to buy it back, your losses are potentially unlimited. And we saw a glimpse of that yesterday. I think we can see much more of that this spring. But as I look at stock market sentiment, it still is decidedly in the fear category, which to me is bullish. Now, on the news, they were really having a field day saying, oh, you can't possibly think the stock market bottom is in. They kept saying that. It was really hilarious. And I kept thinking, I do think the bottom is in. I'm pretty sure the bottom's in, but we'll find out if the bottom's in. I think the problem is the crash is on the upside. And the upside means that all those stocks will go up, and that's good for all of us who hold stocks long and who want them to go up. It's only a problem for companies who are short. They borrowed the shares, sold them, hoping that they would go down and they could buy them lower and close out their trade. But when they move against them and they go higher, they're losing unlimited amounts of money. The higher the stocks go, the more they lose. That's where I think the potential disaster is that spiral where they're losing as the stock market moves against them on the upside. But we'll see if I'm right. Now, I don't often talk about individual stocks, but two I have mentioned recently are the two that are up for and have announced a 20-for-1 stock split, and that is Google, Googl, and Amazon, AMZN. Those stocks were looking very strong yesterday, and I continue to believe that they're a great buy on any dip. Now, also in the conversation yesterday was a lot of talk about interest rates rising fast. And again, as we've discussed, and as I said in my forecast, I only see one interest rate increase, which we just had on this first half of the year, and one interest rate increase in the second half of the year. Because the anticipation of the Fed raising interest rates has already served to make interest rates go higher, I think over time we actually will see those interest rates trend back down a little bit lower. But we're not going to get the 7 interest rate hikes that the Fed was talking about at the beginning of the year. I just don't see that aggressiveness. And that's good for the real estate markets, because I still think the real estate markets are going to hold up pretty well this year, and we are not having a real estate crash this year. If interest rates spiked quite a bit and went a lot higher, that could definitely throw a wrench into things. But I just am not seeing that with the interest rates. So I'm still saying that the market is going to hold its own, that because interest rates are remaining low and because supply is also limited, that the housing market will stay strong this year. Even though I think we will have more supply come on the market, it's still going to be rather a tight supply compared to the demand that's there. But I don't think this is a great time to buy real estate. So I definitely would say if you can wait a couple years, I think we will have that pullback in real estate prices, but it's just not going to happen right now. In the crypto markets, we saw XRP starting to wake up a little bit. We saw some other cryptos starting to move 5 to 10%, but we also had news that there's a potential cyber attack coming. And this was from the Biden administration. This is on all the financial news channels. It's being talked about greatly. I think it's something that they're preparing for us because it's going to happen. And that's why I'm really strongly suggesting you get your cryptocurrency off of exchanges and into your own cold wallet, whether it be a Decent wallet, which is what I recommend, or a Ledger Nano, which I also like. I just think it's a little bit more complex to learn than a Decent wallet. The Decent is much easier to learn if you are just getting into crypto. But you don't want to leave it on the exchanges because things can happen while it's on the exchanges. You don't really own your crypto if you don't own your keys. That's true. You need to get them in your own possession. If you don't have time to get a physical wallet shipped to you, then you could consider a software wallet like the Zum wallet, which is XUMM, or the Trust wallet I also like. But again, those are online, they're software, and it's safer to have your keys completely off of the internet, which is why we like the cold storage. And my last point is the economy is opening up. And yesterday on the news, they were talking a lot about hotels and airlines and how travel is going to be back in vogue in a big way. That the economy's opening up, people want to travel, there's pent-up demand for travel. People are especially going to be traveling internationally. They're taking bigger trips. They want experiential trips like going to Italy and learning how to cook and being able to bring that skill home with them. So these are the kinds of things that people are looking forward to, and we understand that after being locked up for a couple years. So this is going to be a big positive for the markets, and it's going to help all of the travel-related stocks bounce back sharply, such as cruising and airlines and hotels, Airbnb. Again, that was something that was in my January forecast, and here we are heading into April, and it looks like that's going to be the time horizon when everything really starts to open up. That's very bullish for the markets. I'm not seeing the negatives. I really see things moving forward. I think it's quite possible that the low is in for the market. Not that we won't have pullbacks, we will, but I think probably the bottom that we've seen may hold. We could go down to test or to be near that. So is the stock market bottom in? I think there's an 80% chance that it is, but that's just my opinion. What I want to encourage you to do is hold through this, because no matter what is thrown at us, I really see a stronger stock market coming this spring and summer, and it's going to be worth it that you held through this and made any purchases on dips that you could of quality stocks and quality ETFs, quality sectors that really got undervalued, because these kinds of scary times provide great buying opportunities, and that's what it really is. And we will get through this together. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button, and you'll be notified as soon as new podcasts are available. My entire library of wealth mentoring podcasts is on my website at lindapjones.com/podcasts. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.